Hello, everyone. I'm Sofia Cruz. Welcome back to the Midnight Markets podcast, where we break down financial trending topics and we dive deeper into them with insights from pro minds. This week's special guest, she's studying international affairs and economics with a minor in French. She has worked at the Bombay Stock Exchange. She's the one and only Tanya Syed.
Hi, Sophia. Thank you so much for having me.
No, thank you for coming. So tell us more about yourself and your interest in the markets, please.
So, a little bit about me. I'm originally from Mumbai, India, but I went to high school here in the United States. I am currently a freshman here at GW. I'm studying international affairs and economics with a minor in French. And while I'd always been interested in the markets, my interest really peaked when I started working at the Bombay Stock Exchange this summer. I was doing an independent behavioral economics research project, and I'm also an analyst for the Stock and Portfolio Management Club's investment fund. And since then, my interest in markets has only peaked. I read our Midnight Markets newsletter every single day, and I try to follow the markets as much as I can. My specific interest is international and political economy, looking specifically at the ways that geopolitics and regulation impact the financial markets and vice versa.
Okay, so you're super immersed in what's going on in the news and what's been happening with all these tariffs. There's a lot of uncertainty out there, especially not only for market followers, but also for the public in general. I don't know if you've seen, but the U.S. has delayed the Mexico and Canada tariffs, but it has moved on with the Chinese tariffs. What do you think it's the strategic thinking behind these decisions?
So I'm actually going to delve a little bit into IR theory and specifically realism. So now, for the people who are not familiar with realism, realism is one of the three major schools of thought in international relations, and it basically argues that the international system is anarchic and states really look out for themselves. And specifically, I want to talk about great power politics. Now, great power politics argues that the international system is really driven by big, strong states that are looking to maximize the amount of power that they can gain in the international system, with the eventual goal of becoming the hegemon or the only great power in the system. And while this applies a lot, while this is mostly considered in the realm of security policy, security studies, or military studies, I think that this can serve as a very good framework for understanding why the United States proceeded with its tariffs on China and not with its tariffs on Mexico and Canada. So, post the World War, we've seen the United States exist very much as close to a hegemon as a state that it can get. It is the most powerful state in the international system economically and militarily. But in recent years, we have really seen China rise as a competitor, and that is why. And the main important thing to remember is that the tariffs in the case for Canada and Mexico served as a bargaining tool, whereas in the case for China, it has served as a economic containment tool. And this isn't something that is partisan. If you look at the first tariffs that the Trump administration imposed back in 2017, the Biden administration did continue with most of these tariffs on China. And now the Trump administration is slapping on extra tariffs. And why is that? Because they want to economically contain China. The U.S. sees China as its major strategic competitor, and it has also slapped tariffs on very key industries such as, semiconductors and critical minerals. And not only that, this tariffs has been followed or built off legislation such as the CHIPS Act, which is, again, investing billions and billions of dollars in, American semiconductors so that America can maintain its strategic advantage ahead of China. Whereas, as we can see, the reason that Canada and Mexico got the tariff relief is because they made major concessions for border security. Mexico has deployed now 10,000 troops to curb illegal immigration, and Canada has agreed to invest more than $1 billion in border security to combat illegal immigration, fentanyl smuggling, and crime prevention. And not only that, but for the United States, Canada and Mexico are key parts of its supply chain. So anyways, slapping tariffs on Canada and Mexico would actually harm the U.S.'s strategic advantage in manufacturing that it is trying to build against China. So I think great power politics is a very good way of analyzing why China decided to go ahead with the why the
Mhm.
United States decided to go ahead with the tariffs on China and now with the tariffs on U.S. and Mexico. It's because, and I think another thing is that the the China issue or has been is almost as bipartisan as you can get in the United States, as I have seen so far.
Wait, can you explain that? Like,
It's that China is not a partisan issue in the United States. It's that there is broad consensus across both sides of the aisle, across the Democrats and the Republicans, that China currently poses one of the biggest, if not the biggest, security threats to the United States. I mean, again, like as we saw with the TikTok ban earlier, the legislation was deeply popular across both sides of the aisle. In fact, the legislation was introduced first. It was started by the idea was started off by Trump, but the actual legislation was introduced by a Democratic member of Congress. So the China issue is very bipartisan. It's a point of unity for American politicians, and it is frankly a winning ticket as well. Although I will say that it that okay, you can cut this part. Yeah, you can edit.
yeah.
It's a winning
So
issue.
for Mexico and Canada, those are threats. But for China is stopping them from becoming a big power greater than the US.
Yes, exactly. And that is why Mexico and Canada got the 30-day extension for the tariffs.
What do you think will happen after the 30 days?
I think that is a little hard to predict right now because especially with the current administration that we have in the White House, I think only time can tell. You
Only
know,
time, yeah.
but I really doubt that because we've already seen the 30-day extension, I doubt that we're going to see another round of tariffs,
Yeah.
personally.
Do you think like CPI would be affected by these type of tariffs if they were to happen?
100% because so much of American produce comes from Mexico, right?
Yeah.
It's that think about avocados for example. You know, where do we get most of our avocados from? Mexico,
Mexico.
right? And especially when we have an administration that has really campaigned about reducing the ridiculous inflation that we've seen these past couple of years, that an administration whose rallying cry around the campaign was to reduce egg prices, right? I don't really think we're going to see them implement tariffs that are just significantly going to increase the cost of living for pretty much all Americans.
Yeah, because that would affect everybody literally.
Exactly.
Yeah, so talking about the American population in general, they would be affected. Okay, let's hope not. But if the US and China were to get on a trade fight, let's say, what are the industries you think would be the most affected by this?
So I think that the industries that would be most affected in the United States when it comes to consumers would be tech, agriculture, and consumer goods. Okay, so number one, um, when it comes to agriculture, China is the top buyer of American soybeans, pork, and corn. And in fact, back in 2018, 2019, when China retaliated with tariffs on American farm goods, it in fact led to billions of dollars in lost revenue, right? And many American companies rely on Chinese manufacturing. And obviously, as we know, the tariffs lead to like much higher production costs and they lead to higher prices for American consumers. But I will say that over the past couple of years, many of these companies that were previously affected back in 2018, 2019, such as, Apple, for example, they have started rerouting a lot of their supply chains to other countries such as, parts of Southeast Asia like Vietnam or India. And while this is not only affected by the tariffs, it was also affected by things such as the pandemic, right? And we can also see, so this morning itself, China announced a series of retaliatory tariffs on American products, saying that it would impose an additional 15% tariff on coal and liquefied natural gas, an additional 10% tariff on crude oil and agricultural machinery. And
Yeah.
not only that, but China has announced that it would that it's going to launch an investigation into Google based off for antitrust violations and export control items. So I do think that these are the industries that we are going to see mostly
Mostly
affected
affected.
by this sort of ping pong game of
Yeah.
tariffs.
It's like a trade fight, not gonna lie.
It is,
Yeah.
and but I do think that one can make a much stronger case and an argument for the Chinese tariffs than you could do for the tariffs on Canada and Mexico. Because, well, if you think about it, like American companies already play on a very uneven playing field in China. And not only just with the fact is that, like, so many American companies, such as, Facebook, Google, Twitter, they do not have access to the Chinese market at all, but it's also when it comes to manufacturing as well. So there is an uneven playing field. So you can make a much stronger case for the tariffs against China than you can for the tariffs against like Mexico and Canada. And also not only that, but the United States has banned the sale of AI chips such as like
Nvidia,
Nvidia's
yeah.
A100 and H100 to China. And while in a lot of people, and of course, like, we saw with DeepSeek that, like, the Chinese AI industry is, on the rise. But there's questions of how sustainable it is going to be. And again, like, China's economy is export driven. And these US tariffs do make Chinese goods less competitive globally. And again, like I said, it's part of their economic containment strategy.
Yeah.
And I don't think that American consumers are going to be as affected as they were last time, back in 2018, because a lot's changed in the past 7 years. Like I mentioned, a lot of companies have rerouted production and supply chains to countries such as India and Vietnam.
Yeah, that is so true. Like we would be more affected if the 30 days would end and nothing happens and the tariffs still there for Mexico and Canada.
Not only that, but again, the like I mentioned earlier, so many parts of like the supply chains are based in Mexico and Canada, and that and a tariff on that and reduced trade with that is would only lower our competitive advantage against China, right? And as we can see, is that other even with past administrations, such as the Biden administration, they still kept most of the Trump era tariffs from 2018 and 2019. Most of those are still exist to this day, but they just expanded trade with Mexico and Canada because they also recognized the importance of these, like, North American trade relationships in countering,
The growth of China.
yeah.
Yeah.
So, actually, to conclude our piece on Chinese tariffs, I read a very interesting article by the Mexican ambassador to China a few days ago, who again he served in this role for 6 years up to 2013, and he in fact made a very good argument for why these tariffs are essential. And even though as someone who generally is really big on free markets and open international trade, I can see the merits of this argument, right? So he talks a lot about the fact is that like China has manufactured its competitive advantage. This is not of a competitive advantage that has risen out of classical liberalism and free market economics. No, it is a state-sponsored industrial policy. China is a manufacturing behemoth in virtually every single sector, and it dumps all these goods at overseas markets at artificially low prices to capture these markets. And the United States is not even the most affected country by this, but it is one of the only countries that is actually taking a stand on this. You know, it's that nations must not sacrifice their economic serenity and supply chain security in exchange for cheap consumer goods. And while I do think that that might be a little extreme, I mean, like, we don't want to like go back to the eras of like protectionism and like mercantilism, right?
Yeah.
But again, tariffs, I do believe that they have their place because at the end of the day, tariffs are an economic tool. It really, I think it is misguided to label any and all tariffs as automatically bad because again, like, it is so heavily dependent on the context that they're used in.
Yeah. And talking about the new administration and all the new things they've been doing, we need to acknowledge what's been happening, what Trump just passed. and it's the government investment fund. It's a sovereign government investment fund, like the ones in Norway, Emirates. He said he could use them to buy TikTok or big companies like that. But he didn't explain where the money would come from. So where do you think hypothetically this money would come from, and how could this benefit the American people?
So, one source of revenue that I do see this coming from is actually the tariffs. That would be a source of revenue for the American government that the American government could use to put money in the sovereign wealth fund. And it's also the government could sell its stakes in public land and energy resources or other federal assets to gain this money. Other possible sources of revenue is, like taxes on capital gains and corporate profits, but I really don't think that's happening because, again, the Trump administration did market themselves as the administration of tax cuts, and they want to cut the corporate tax rate even further, so I don't think that is going to be an option. So I'd say mostly trade tariffs revenue that will be redirected to this sovereign investment fund, and also probably the sale of some U.S. government assets. As Elon Musk today just claimed that the Doge helped save $1 billion based off of its cuts from federal DEI programs. I don't know how realistic that number is. I haven't done research into that, so maybe the money that the U.S. government would be saving with some of its spending cuts could be redirected to the investment fund, for example. And I think that the best ways that this fund could be used to benefit Americans is, number one, support invest in competitive sectors that are the need of the hour. So, for example, AI, R&D, or clean energy projects. Okay, cut out the clean energy projects part. It's the all of these, and so for other countries that have investment funds, they try to align those with the country's goals. So for example, Norway prioritizes long-term stability and invests in renewable energy. So I think that what is the priority for the United States right now, maintaining its tech competitive and its tech advantage. So I do think that where they might invest a lot in AI. I mean, we already saw Trump announcing $500 billion for Project Stargate, so I think that is one. Again, like you said, the U.S. could use the fund to acquire or block foreign companies, such as, use it to buy TikTok. Because, again, everyone thinks, TikTok is back permanently, but they've only been given, I forgot if it was either a 75 or a
75.
A 75-day extension. That another thing that I think the U.S. could do was use the investment fund for public infrastructure and to reduce the need for, debt finance projects. And not only that, so yeah, those are what I think could be some of the uses of the fund. And although, I will say that it is pretty unusual for a country like the United States to have a fund, because a lot of the way that sovereign wealth funds came about, it's the biggest ones are in countries like Qatar, Kuwait, the UAE, and Norway. These are all countries that are very oil rich. And again, these Kuwait and Dubai, they actually have no income tax, right? Because they use these sovereign wealth funds to finance public infrastructure projects without having and also again from oil revenues, so that they don't have to tax their people. So if this investment fund leads to tax cuts for people, I think it would be very popular. But yeah, it's also because a lot of these countries, because they're so oil dependent, they use this investment fund as to diversify their sources of revenue and income, so that in a case in which oil prices slip, that they aren't completely helpless.
Yeah, that is so true. So it's backing up the economy in some way, right? Yeah. Thank you for sharing your insights, really. Thank you for making time to spend with us today.
Of course.
So that's a wrap on today's episode for Midnight Markets. Tune in for next time. If you enjoyed this, make sure to leave a comment on Spotify so more people find out about the podcast, and share with your friends. See you next time.
See you.
The Midnight Markets podcast by the GWU Stock and Portfolio Management Club features student discussions on finance and market trends. This content is informational only, not professional advice.